What insights should taxpayers have as they prepare their 2020 returns? We're speaking with Elliott Kreppel of Kreppel Tax Advisory to get his thoughts. I'm David Grana, and this is Real Talk. Elliott Kreppel, thank you so much for joining us today. Really appreciate it.
Thank you. Thank you for having me.
So you're a very busy guy this time of year. Wanted to find out a bit about what are the services that you offer for your clients through your tax advisory company.
So, at our firm, we have a host of services that we offer. We're a full advisory firm. So we can have services that will vary anywhere from, regular traditional tax preparation to preparing corporate returns, to elder care services, financial planning services. We try to make it like a one-stop and shop for our clients so they don't have to go here, there, everywhere.
Are there any major changes that taxpayers should be aware of as they file their 2020 returns?
Yeah, actually there are. It's funny how the IRS will not promote certain credits that are on the return. And if you have a inexperienced tax preparer, you could be leaving some of these credits on the table. For instance, if you take the standard deduction, there's a $300 basically COVID credit that they're giving as a charitable contribution. As long as you make some sort of charity contribution, it's an actual deduction on the front part of the 1040. It's only $300. It goes on your Schedule A, where in the past you used to itemize your charitable deductions. Today, or contributions, I should say, today you can just take that $300 on a Schedule A if you take the standard deduction. So that's one sneaky credit that a lot of people are overlooking. And then the other one, which is actually very important, is the recovery rebate. So a lot of people will come into our office and they'll say, I never got my stimulus check. I never got the 600 or the 1200 if they file joint. And on the return itself, there's a recovery rebate box where you check that off, and the software will calculate that credit for you so you can get it this year in 2021.
Now, we had a very exciting stock market in 2020. A lot of investors made a lot of money, did quite well. If you're one of those lucky people that did very well in the stock market in 2020, and you want to offset or not get hit with a huge tax bill for capital gains as you file your returns this year, what are some ways in which investors can offset some of those gains?
It's really tricky with capital gains because a lot of the accounts that are, for instance, tax deferred to begin with, variable annuities, IRAs, 403Bs, 401Ks, if there was any buying and selling in those types of accounts, it's already tax deferred. So you kind of avoid the capital gains. Now, most people who are trading aggressively, probably it's not in their retirement plans or the 401Ks that they're doing that. They're probably doing it in a taxable after-tax account. And it's really hard to avoid that. You have to have some losses to offset those capital gains. And the IRS still allows you to offset any capital gains with losses. And if you have losses that exceed your capital gains, which, hopefully you don't in such a bull market, the maximum is $3,000 in losses that they'll let you claim.
Now, I myself am a commercial real estate agent. I deal with a lot of investors that want to offload properties, and they want to get the returns, but they don't necessarily want to get hit with capital gains. And I'm sure there's plenty of investors out there that may have done well, especially in the very buoyant property markets that we've seen in 2020. What are some of the tools that are available to investors that want to offset some of those gains in real estate?
So there is something called a 1031 exchange, which is very favorable tax treated, I should say, calculation for very highly appreciated property. It is something that you have to trust someone who knows what they're doing. You need what's called a QI, which is a qualified intermediary. And what that does is the qualified intermediary, if as long as they find like property, you can kind of go from one like property to another, no, regardless of the appreciation, and avoid those capital gains on the property.
And I know you deal with retirees. That's part of your clientele. Of course, we live here in Las Vegas, so I live in Las Vegas, and we have a lot of retirees. If there are retirees out there, or soon-to-be retirees, that want to protect their assets, they don't necessarily want to keep their money in the stock market, especially as we start seeing a lot more volatility in the market. What are some of the ways in which they can protect their capital, but also get returns?
So, we're an advisory firm, and we don't like lean towards one product or another. What we do favor is our accounts that have, tax advantages. And what we find to work are annuities. And there's a lot of different types of annuities that are out there. The one that our clients like the most, and the one that seems to do the trick for our clients, are what's called fixed annuities. But even with the fixed annuities, the rates are so low because rates in general are so low. So there's a neat little one called an equity index annuity, which is like it's tied to an index, either the Dow or the Standard and Poor's, and you still have that principal protection, but it allows our clients to have more return, and it grows tax deferred. So it kind of does the trick for our clients. It's kind of like a CD on steroids, but we don't recommend it that way. We don't solicit it that way because we don't want clients to think they're actually in a CD. But you really do have the same protection with more upside and zero downside in these types of accounts.
Now, you're based in New Jersey, but do you deal with clients all across the country?
Oh, sure. We are qualified in all 50 states. We have clients that are snowbirds that go down to Florida. They go out to your nice warm state, so which beats 20-degree weather here. So we're familiar. Our CPAs are very well qualified with all the tax laws because there are different little state nuances, laws with certain states, and you could get tripped up if your preparer is not familiar with that. So I do pride our firm on knowing those laws, and we are qualified in all 50 and internationally too.
And if someone wants to get in touch with you, they need a tax advisor, or they want some advice on the 1031 exchange or an annuity, how do they get in touch with you?
Sure. So you could go to my website, which is kreppeltaxadvisory.com. They can email me, which is elliottk@ktaxadv.com. We are pretty accessible. We are, they can shoot me an email. They can call. We have a lot of resources at our firm, which is nice. So we're pretty, available to our clients.
And presumably with COVID and all that, probably using technology a lot more often than not to be able to communicate with clients.
Yeah, I mean, we do have, our office is COVID compliant, but we're obviously with Zoom and technology, you have to embrace that. But our average clientele is a little bit on the older side, and it's wonderful to see some of them embracing technology themselves with their grandkids. So they've learned Zoom. But if they want to come into the office, that's fine too. We're COVID compliant, like I said. But if it's someone that's outside New Jersey and they can't do that, we have no problem setting up a Zoom call.
Fantastic. Well, I know this is a really busy time of year for you, and I know you're working long hours to be able to service all your clients. I want to thank you so much for taking the time to chat with us today.
Thank you. Thank you for having me.